Hello, this is Mark from tradinform.com and welcome to this video on how to improve your trading strategies using a Monte Carlo simulator. Okay, what I'm going to show in this video is how that you can create for yourself using Microsoft Excel a type of Monte Carlo simulator that will rearrange and randomize the results of a backtest with the intention of checking the robustness of your maximum drawdown. Okay, so all you need to do to start this is an actual backtest that has been carried out, and we've got the results of this shown in this column AD. I'm going to start a brand new page here, and the only thing I've included on here is the number. I'm going to assign each of our trades a number. I'm going to put in a heading here for our original trades, our original equity, and our original maximum drawdown. Okay, so our original trades we're just going to link to this spreadsheet. So we're going to just put in equals. I'm going to link to this column, this cell here. I'm going to press enter. I'm going to remove these dollar signs so that what we can do is just double click on the bottom right hand corner of the cell, click on calculate, and Excel will include the cells here in this column. So I don't need this spreadsheet, so I'm going to close it. Okay, so our original equity, we're going to start off with $1,000, and when we get trades, positive and negative trades, we're going to add to this. And I'm going to copy this down again by double clicking on the bottom right hand corner of the cell. Next in this column I'm going to calculate our maximum drawdown for the original backtest. We're going to do this by the formula equals this cell divided by max, which for Excel stands for the highest. I'm going to correct this to C2 to C2. I'm going to make the first one of these fixed using F4. I'm going to put all of this in brackets, and I take 1 minus, and then I'm going to double click and copy it down to all the cells below. Okay, so the next element I'm going to introduce in the spreadsheet is the first part of the Monte Carlo simulator, and we're going to need an element of randomness. So we're going to use the Excel formula RAND with brackets, and this automatically generates a random number between 0 and 1 with 15 digits after the decimal point. And I can copy this down again like that. And in the next cell I'm going to use another Excel formula called rank. I'm going to click on here, do a comma, and I'm going to highlight our entire range of random numbers. Close the formula. I'm going to go back into it and I'm going to press F4 to make this fixed. Press enter. We can click this down. So now if I click on the calculate button again, we have a new order for our trades. Okay, so now with the next thing we need to have in here is our new trades. We need our new equity and our new maximum drawdown. Okay, to calculate our new trades, or the position of our new trades using our random and rank function, I'm going to use another Excel function called VLOOKUP. I'm going to ask it to look up this value here. We're going to ask it to look it up in this array here, which is columns A and B. I'm going to ask it to check in the second of these columns. And before I copy this down, I want to use F4 again to make this array a fixed array. So now I can click on calculate, and Excel has automatically moved our new trades in the relative position of the new randomized order. Okay, so our new equity we're going to calculate in the same way as our original equity. So I'm going to press Ctrl C, move that over here, and double click. Our new maximum drawdown. Again, I'm going to cheat and use this function here. Just drag this across here. And double click to copy the formula down to all the cells below. Okay, so here what I'm going to do is I'm going to calculate our profit. Our profit is going to stay the same in both the original and the new versions. This is because we're keeping all the same trades. This particular Monte Carlo simulator is only randomizing and rearranging the order. So we're going to do this by the formula sum of this range here of all our original trades, enter, and then we're going to calculate our original maximum drawdown here. We'll use the max function again. We'll use this range. And we're going to have our new maximum drawdown equals maximum, and it will be this range. And once I press calculate, we'll find we get a new value here. And every time I press calculate, or in fact enter something new, if I go on to formulas and calculate, we'll get a new value for our maximum drawdown. Well, we can show this visually quite easily as well by going down here, pressing insert, and then we have a line graph showing our original equity chart. If I just copy this, paste it here, click in it and drag it over to our new drawdown, we have a visual representation of our new drawdown. And again, if I go on to formulas, calculate, we can see that the graph of our drawdown changes. One thing you want to do when you're using a Monte Carlo simulator is test multiples of different scenarios. So we could easily do this manually, we could just click on this, but what we would prefer to do is run a number of scenarios automatically. So what I've done to speed things up a bit in this spreadsheet is use a recorded macro, and I'm going to go on to macros and click run. And so what it's going to do on the screen now is do 20 versions, and we can see it updating there and updating on the right hand side in real time the different equity curves for the different scenarios. So while my computer is chugging through these different scenarios, I can say that if you are interested in using Excel to backtest trading strategies, I do have an ebook course available in the Amazon Kindle bookstore, and there is a link on the screen if you would like more information about this ebook course. So there I've used a macro. It is Actually, I'm not going to go through it in this video, but it is very easy to record a macro doing a simple task like this, going through and recording the data for each scenario. So what I do want to do below this is work out a few metrics based on what the data is telling us. First of all, the average. We can see that out of these 20 scenarios we've tested, our average drawdown is 5.33%, which compares to our original maximum drawdown, which was 3.75. So we can see straight away that our original strategy may have been, just through pure chance, may have been suggesting that this strategy has a lower drawdown than it would do in the future. You can use another formula, say the max function again, and this shows us that out of these 20 scenarios, the maximum or the highest drawdown that was experienced in all of them was 8.76, which is more than double our original drawdown, which again could be significant. You can do whatever metrics you like to ensure to your own satisfaction that you have a robust trading strategy. You may want to look at a 85 or 95% percentile. You may want to look at the standard deviation. You may of course want to do a lot more than 20 runs, and you are of course welcome to do that. So I hope you found this spreadsheet useful. I hope you found this video a useful guide in how to create your own Monte Carlo simulator, and if you would like more information about using Excel to backtest trading strategies and about the financial markets in general, please go to www.tradeinformed.com.